Hey everyone, me Kevin here. Tesla smashed earnings, and I want to give you my perspective on what the heck is going on at Tesla. I'll also give you my price target for Tesla, whether we should buy, should we sell, what kind of rate of return could we actually expect investing in Tesla today after their stock has gone up in after hours due to earnings. Let's go ahead and go through all of this right now. So here we go. Let's start with the Tesla slide deck. So basically, I'm gonna only show you the highlights here. I'm not gonna read you everything in this, but what I really want to focus on here are some special numbers that just came out. A very, very, very special number, and this is probably one of the most important numbers to look at when you are considering investing in a manufacturing company, whether that's NIO or whether that's Tesla, it doesn't matter. You want to look at this number right here, which is automotive gross margin. So before their operating expenses, basically what's revenue minus what it costs to make that vehicle, what do we got? And right now, Tesla is taking $27.7 down to the bottom line for every $100 of revenue they have on their cars. That's a very, very good. Now, their total company margin is around 9.2%, but that's okay. Right now, we're focused on this number right here. And the reason for that is Elon Musk has said he thinks he can get this number to 30%, and nobody has believed him. Yet consistently, Elon Musk has been approaching his 30% target. When I began investing in Tesla, their margin was around 16 to 18%. NIO, the big competitor where people are thinking, hey, this is the next, Tesla in China. Right now, their margin's around 5.5%, and they're trying to, like their goal right now is to get to 12% as a margin. So 27.7% is absolutely incredible. Even if we took out, and sometimes Tesla gets bagged on for this because they do get regulatory credits. Even if we took out the regulatory credits here, Tesla has an incredible margin here. The profit margin on their vehicles is getting better and better. And what's insane about that is here's Tesla's sheet on battery day where they think they can get their entire capital expenditure down 67% on batteries because of their new battery technology. Remember, Tesla is now planning to integrate their cell modules directly into the vehicles. So that way batteries are actually a structural component of the car. By the way, a lot of folks were wondering, hey, Kevin, what do you think about like the battery swapping as a service? When I made my last NIO video and talking about Tesla as well. And the reality is if batteries now become a structural component of the car to get gross margins down on cars, maybe battery swapping is actually a bad thing for NIO to be doing. Because see, Tesla, instead of focusing on battery swapping, is focusing on getting the cost of the batteries in the cars down. Now you can produce more cars. Elon Musk has in the past told us that, hey, superchargers are fast enough. We don't need battery swapping. And when we tried it in America, very few people actually like it in America. It kind of makes us scratch our heads and wonder, do we need battery swapping in America? Now, this is not to say that NIO's bad for doing battery swapping. I think it's great, and they charge a monthly fee for the battery swapping that they do in China, which is awesome. I think they charge around $150 a month to be part of the battery swapping and supercharging network that they have for NIO. But looking at Tesla, I honestly would much rather have the company bank on getting this margin as high as possible, especially if they're trying to come out with a $25,000 vehicle. So this definitely makes me bullish on Tesla, and I wanted to get my thoughts out on battery swapping because I had a lot of questions on that. Now, the other thing that's very incredible now is if we 4x, just to sort of annualize the current earnings per share at Tesla, you currently have earnings per share of about 76 cents. And if we 4x those, you really get a 125 PE ratio by 4xing the current quarter's earnings. That's actually not ridiculously high for a company that I believe is at the beginning of its exponential growth curve. Remember, in some of my last Tesla videos over the last couple months, or I guess last month since Battery Day, I mentioned, I think Tesla, we look at Tesla stock and we're like, Tesla's on this exponential growth. Oh my gosh, why would I invest at the peak? I don't think we're investing at the peak, folks. I think buying Tesla today is buying on the ramping phase of getting to scale as a manufacturer. It's absolutely incredible. And these numbers are really starting to prove that. We've got some more data here too. I only highlighted in this versions the bottom lines that I want to talk about, so I'm going to keep this simple. Something that's really, really incredible that I liked here is that Model S and X deliveries actually went up. Usually these have just been going straight down, over 2020 basically. I mean, look at this. We went from 19,400 to 12,000 to 10,000. It's like, oh my gosh, Tesla has cannibalized their higher end vehicle with the Tesla Model 3 and the Model Y, which, by the way, they share 70% of the same parts, which is just another way Tesla is genius in keeping their costs down. In case you were wondering, by the way, like, why is Tesla coming out with the Model S Plaid before they come out with their Roadster? Well, think about it. It's basically the same parts as the Model S that they're already making, just the better battery pack, right? So a lot of the similarities are the ways Tesla is so incredible in getting their manufacturing down pat. Now, something else that is absolutely mind-blowing in these Tesla earnings, folks, solar deployed. I've been saying this for a long time, Tesla's solar lease system is disruptive, but it's not profitable. I believe that Tesla is basically loss leading their solar panels, which they will lease to you. In fact, you could use the Tesla referral link down below and they'll give you like $100 or $200 if you sign up for their solar panels, and you can lease them. So I think it's like, if I did them on my house, I think it'd be like $65 per month, and you could lease Tesla solar panels. And if you want to cancel that lease, you could cancel at any point. Like, they'll put the panels on, you could cancel next month and go, I don't want them anymore. And they just turn off the service and they'll leave the panels there. That way you could sell the house if you wanted to. I mean, this is going to give Vivint Solar and Sunrun a run for their money. This is a phenomenal system because even though Tesla might lose money on their solar deployments, guess what they're doing? They're upselling all of their solar customers with storage for their energy. That's right, the power packs, like the power walls at Tesla. Look at this growth here. This is insane. From quarter 2 to quarter 3, we almost doubled our growth in power packs. And this is 759 megawatt hours compared to the 419 we had in Q2. This is absolutely incredible. Incredible work on really getting the storage power walls out there. Kind of makes me want to buy one, just seeing the success of this, honestly. It's like they say, success begets success, right? Now, this is one of my favorite metrics, is looking at the production capabilities of the factories. We've right now got expectations that we will be at 500,000 units that we can produce, or cars that we can produce at Fremont. Now, I know that this says current and it's 90,000 and 500,000, but they are not yet at current. They expect to be there at the end of this year or next year to get to full capacity at Fremont. So Fremont should be making 500,000 vehicles a year by the beginning of 2021. Shanghai could potentially hit 1 million vehicles produced by the end of 2021, which Tesla has a huge appeal. The huge American appeal in China is actually very, very powerful. It's almost kind of like the opposite of what we think of here in America, where it's like, do we want to buy a Chinese car or an American car? It's the opposite over there. Berlin, 500K. Texas, 500K. Late 2021 for these. They currently say summer of 2021, but I'm saying late 2021 just to give a little bit of a buffer. And this is going to be very important for when we start talking about our numbers here. Okay, now this full self-driving thing is a little bit crazy. So Elon Musk tweeted yesterday that they're going to release full self-driving starting last night. They're starting to roll out full self-driving, but only to their very safest drivers. So basically, they're now going to segment their audience into, these are the safe drivers, these are the crappy drivers, and the safest drivers are gonna get full self-driving, which to me, I kind of feel like that's ironic. They should have like the crappiest drivers get full self-driving, stop those people from driving. But what it tells you is this is a lead-in to Tesla killing it in the insurance division, because they're going to be able to charge crappy drivers more than their safe drivers. Absolutely brilliant model, and that's not even on the radar right now in terms of profitability, but it should be. Absolutely incredible. And the fact that Tesla can increase a vehicle's speed by charging somebody a little bit more money, I mean, this was mind-blowing as well. Our Model Y all-wheel drive customers can now purchase a $2,000 software upgrade that improves 0 to 60 time frame to just 4.3 seconds. That's weird. You pay $2,000, your car gets faster. Absolutely incredible. They reiterate here how excited they are about getting to their $25,000 vehicle. So I mentioned already the loss leader thoughts that I have regarding the solar business. Still believe that. They show here pictures of the solar roof in production. I'll hide myself there for a moment. And I shouldn't say in production, I should say in install. So this is 7:30 a.m. they say. This is noon on the same day. Notice though, there are like 7 to 8 people here. So in fairness, most roofing companies don't have like 7 to 8 people working on one roof at a time. This is a lot of might to try to get this rushed out. And by 2 p.m. the next day, they got it done. Not bad. Looks like a smaller roof. I'll give them that. Smaller roof here, but and they got a ton of people working on it. But impressive nonetheless. So, okay, let's get into their financial statement quickly here. We'll look at a couple pictures here. These are all on their slide deck. I think this is their new die-cast machine that they've installed. A lot of robotics, but you see a lot of these things in a lot of the manufacturing photos. This is Berlin. This is incredible. They've already got this unit fully roofed over here. This unit fully roofed. Roof is finishing over here, and now they're starting to install this. Absolutely incredible. This is Gigafactory, Texas. Looks like all the grading is done, and now they're starting to do the ground infrastructure work. Pretty incredible. Mega packs, amazing. Okay, so let's go ahead and jump on over here, and then we'll do some projections here with the spreadsheet. So what I really liked seeing here is yes, we had growth in the energy sector, but we're still at a terrible margin. We're only at a margin of 2.7% right now. This is a profit margin on solar, and we should really have that be somewhere between 10 to 15% by 2022. So this is going to be a huge opportunity for Tesla to increase their profitability and make their shares even more valuable. Their operating expenses are coming in at about 14.2%, which is pretty good, and they're paying 33% in taxes this quarter, which is a little higher than usual. Liabilities, cash flow, absolutely incredible figures. Honestly, we don't even need to go into those. Let's instead go ahead and pull up the spreadsheet. So this is you've seen the spreadsheet before if you've been here on the channel before. If not, welcome back to the spreadsheet. So this is my projection for the end of 2022. So let's go ahead and explain here. All right, so my estimation is because we're going to see a $25,000 vehicle, I'm going a little bit conservative, and I'm going to estimate that we're going to have a $40,000 revenue per vehicle in the future. We already have the capacity to create 2.5 million vehicles, which is kind of insane to say. But remember this chart. 500 plus 500 plus 500 plus a million is 2.5 million. Like, the road is already paved to produce 2.5 million vehicles. So when we pull up the spreadsheet here, it's no surprise that I suggest, hey, let's do 2.5 million. Although I've been using 2 to 2.5 million by the end of 22 for about a year now. So I'm very excited that now we're finally seeing the path to where we're getting to that. That would put total revenues around $112 billion. Lease revenues actually went down to about 2.7%, which is fine, that's better. But a lot of people don't lease the Tesla. Very few people are leasing the Tesla. The margin, the last time we did this spreadsheet, we had Tesla's expense margin for vehicles at 72%. And remember, they just came out and said that their expense ratio is somewhere like 72.3%, I think it was. Yeah, there it is, 72.3%. So all I'm doing is 100 minus the 27.7 to get the expense ratio, right? It's the opposite of the profit ratio. So 72%, that remains accurate. We'll go ahead and leave that for 22. Honestly, we could potentially move that to 30% because this is the 2022 projection, and they've basically already hit that number. Absolutely mind-blowing. Lease revenue, not that big of a deal. Energy, I'm going to keep. So right now, we are on pace to do, if we take this quarter, we're on pace right now, which is crazy to say, to do about $2.8 billion in energy. And I'm estimating that by 2022, we could get that to $5 billion. But the problem is we need to get the margin to about 15%. So we're gonna keep 15% on that, although it's kind of a drop in the bucket when we actually just consider the fact of all of the vehicle production we have going on. And so if these projections are close for 2022, which so far, every one of my projections has just been nailed, 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 nailed. The big one I'm worried about a bit is energy production, but we'll get the semi in, we'll get the semi truck, so we'll get some higher cost vehicles in. Maybe that'll offset a bit. Maybe I'm low on my $40,000 per car. We'll see, especially with the full self-driving upgrade. Like for example, I think the $25,000 car, they might have a 25K version, but then you get full self-driving, you'll be in at $34,000, right? That'll kind of help us keep that average up. So, okay, with shares outstanding and a net income of $17.5 billion in 2022, it would not be unreasonable for Tesla to be selling for $635 per share at 40 times earnings. That's actually not even like an insane valuation, especially in the world we're in right now. That means if you invested today at $432, and these numbers ended up being accurate, you would be at a 21% rate of return over the next 2 years. All right, now I made 2 changes. One of the changes I made is I changed the margin, and I went with Elon's optimistic 30%. If we could get to Elon's optimistic 30%, and I changed the PE ratio to $50. That is, if people value Tesla at $50, times earnings in the future. Just changing these 2 things could mean by the end of Tesla, or end of 2022, Tesla could be selling for $867 per share, which would represent a return on investment of 41% per year over the next 2 years. Absolutely mind-blowing, folks. Tesla is on track to do absolutely insane and amazing things. I'm so excited about Tesla. Folks, subscribe to this channel if you want more Tesla updates, because I got more Tesla updates coming. This is so fun, so exciting, and cannot wait to provide more updates. Stay tuned. Thanks so much for watching, and we'll see you in the next one.